Hey traders, and welcome to the first psychology video in the Forex Trading Academy. So what I want to talk about here is how to get past the negative psychology to help you be a consistent trader. I want to go over maybe some of the pitfalls that I've had, which helped me leapfrog to success. And hopefully that's going to jump you over all the hurdles that you would have to make you a consistent trader as well. So for those of you that are brand new to trading, I just want to start from the beginning, basically. Why do we talk about psychology? And it's not just as simple as having winning trades, because we need to adapt our mind and get used to trading large figures in the market. We need to get used to having losses, which will come and are part of the trading game. And a lot of traders think, oh, I just need to increase my wins and then I'll be fine. The way I've always looked at it is, no, you want to reduce your losses. If you reduce your losses, you're maintaining your trading capital. And then when the wins come, that's when you're going to see the profit gain. So just as an example, right? Each trade that you take, it has to be one of a number of trades. You can't say, this is the trade. This is a trade that's going to get me 5%. This is a trade that's going to get me 10%. I'm going to put it all on this. I'm going to flip my account on this trade. If you do that, I guarantee you, you will never succeed. So you'd never want to trade more or risk more than 1%. And I don't mind if you risk 0.5%, 0.25%, but depending on what you decide that you want to risk, you then have to stick with that. You can't fluctuate and I'll go from 0.25 on this trade. Next trade, I'll go from 0.5%. Next trade, I'll go to 1%. Now, again, with that, you will not be consistent. Because what you've got to think of is that when we talk about a risk reward ratio, which is, I'm just going to use 1% as an example, risking 1% to get 3%. If you lose one trade and you're 1% down, and then you win a trade, you'll then be 2% up. So that's probably easy to explain the other way around, actually. If you win a trade, you're 3% up. That way, you've then got 3 losses before you're back at break even. If you then start fluctuating the amount that you're risking, that risk reward ratio won't have an opportunity to play out in your favor, right? And I would count this sort of the rule of 3, right? 3% always the minimum. And I've mentioned this before. So if you're trading 3% and getting 3% a day, as an example, that equates to 720% a year. So if you eventually got a funded account of 100,000, and I'll go through that with you later on, and you make 3% a day, that can be $750,000 nearly every year based on your consistency. And so when I show you in these videos, you know, the ability to get 5%, 10%, 15%, even 20% and more on some of these trades, I'm showing you the potential, and it's for you to decide when you're satisfied. So for me, what I do with the majority of my trades is get 3% and get out of the market. Now, if I'm doing so, let me just explain. If I'm maybe trading against a trend, so a counter trend trade, and I'm trading a pullback based on all my criteria are there from the strategies that I've already taught you on the Trading Academy, I'll get my 3%, get out and go and enjoy my day. If, however, price is at a higher time frame point of interest, and let's say we're going short and it comes up to a high time frame point of interest, and I get all my trading criteria, my entry criteria, then, and I know that maybe there's a 200 pip drop coming, then I'll more than likely hold that trade for the majority. I will take off my 3% when it gets to that level and then just let the rest run. But that's how I manage my trades, just because I know how powerful it can be getting 3%, because we're talking about gains over a long period of time, not just how much can you make in a day. So that's something to take into consideration. As well, something that I've spoken about quite a lot within my podcasts are, as I said, when we look at a trade, it should be a trade of a batch of trades. So if you're using, let's say, the 15-minute for an entry, and you're trading the Asia range fills, then when you do one trade, you can't just say this is the trade, this is one of 10 Asia range fills. And then basically what we're going to look at from that point is, if you win 5 trades and you get 3%, that's 15%. Let's say you lose the next 5 trades. Therefore, you're 5% down on those trades. So you lose 1% per trade. So 10 trades and overall, win 5 trades, 15%, lose the next 5 trades. Therefore, you lose 5%. You are still 10% up at the end of that batch of trades. And this is the way you need to look at it, because you will have loss and loss and loss, but then you get the losses out the way to allow the wins to come through. And as long as you are being consistent with the strategy you're using, so everything that I show you when I enter, it's really robotic. In terms of what I mean is I look at the charts and say, where are we? Are we in a point of interest? Yes. Have we got a breaker structure? Yes. Have we left behind a void and an order block? Yes. Do I know where my stop loss is, and does it make sense for my stop loss within that trade? And do I know where my take profit is? Is it at least 1 to 3? Yes. As long as I've got all my confluences, I will enter. That's just the way I look at it. If you start looking at trades and think, well, I like that one looks good, I'll enter that, and you lose. And then you have another trade that comes along, you think, so it's in the next day, you go, well, I lost yesterday doing this, therefore I'm going to sit out. And then that trade hits TP, you're going to be pissed off. You're going to start revenge trading and try and jump in too late, and you'll just get stopped out. So just be robotic with it. It doesn't matter if you win or lose. So the way I look at it, if I win, 0 emotion. If I lose, 0 emotion. For new traders, and I was there, like when I first started, would be if you win, you feel excitement, you're ecstatic that you got the direction, the market correct. You see money on your screen, and all your calm, cool decision making goes out the window. And you're like ecstatic, and you wonder what you're doing. Are you going to take your profit? You know, what are you going to do basically? How are you going to manage that trade? So first of all, if you cut that trade too early, let's say 1% profit, you're not allowing your 1 to 3 risk reward ratio to play out. Therefore, again, this is going to affect your performance over those 10 trades that you take. Then if you let your trade run for too long and you've got unrealistic take profits, that's likely going to come back and take you out. So again, you're going to end up break even on that, and you're going to be quite frustrated. So you just need to look at it and go, right, cool, I'm 1% up. I'm nowhere near my target yet. I've moved to break even. What will be. If it's either going to be a take profit or a break even, fine. And just leave it alone. Don't mess with it. If you have to, walk away from the screen, set and forget. In relation to losses, so losses will come. Everybody has losses. And like I said, it's a numbers game based on the strategy that we use. So, but when you enter a trade and you see in your MT4, it's red, and you're in drawdown, you're going to stop panicking, you're going to be scared, you're going to be pissed off, and again, your emotions are going to run a bit wild, and you might close that trade out early. Never do that, because you've got to think the reason that you entered this trade is because it's got all the confluences of your strategy for you to enter, and you've got to let it play out. Normally, like, if people close the trade out and then it goes in their direction, they try and get back in, then it's too late, then it comes down, spikes them out. Whereas if they'd have just held their trade, it would be in their direction, they've moved to break even, and that's it. All right. Also, so just make sure as well, I mentioned in the videos about the FX calculator that you can use, always calculate your risk correctly. You never want to over leverage, over trade. So max 1% always. If you're going to do less than that, I would stick with that for, maybe a batch of trades, 10, 20 trades. And then if you then want to up your risk and start again, then you can do that. And so that brings me on to actually as well, just monitoring trades. So journaling, right? So you need to keep track of your progress. I think this is extremely important. This is something that I've done. This is something that all the successful traders that I know have always journaled. And what I mean by this is, if you are looking to take a trade and you can take a screenshot of before, write down on TradingView or in a notepad, or just a journal, whatever you want to do, why you've taken that trade. I used to put it in notes on Mac, screenshot, and then underneath the reasons why I've taken it, what my emotions are like. Have I had a good day? Am I happy? Am I pissed off? Have I had an argument with my girlfriend? Have I had a crap day at work? Have I got a flat tire? Have I lost money today? Am I revenge trading? Just write down all of your emotions, and then put a screenshot of the trade afterwards. And the reason for doing this is because, let's say all week you've been stopped out and it's gone in your direction. It might be that you're just entering too early. So have a look. And then if you are, you can always adjust that for the next week and say, right, well, all last week, I entered 10 pips too early. I wasn't patient enough. I didn't wait for price to come to my exact point of interest or exact retest of the void or the order block. And therefore this week, I'm going to do things a little bit differently. And you can just review your trades at the end of each week just to assess your performance. And then in there as well, you will have every single trade that you've taken, and you can see how many you've taken and which ones have been successful and which ones have been losses. Again, you can also make sure on those that you're also just getting at least 3%. And I would advise for all new traders starting, just leave it at 3% for now. As you get better and better and better, as you get more profit and more consistent, you can start to extend your profit taking targets. So, and next thing I want to talk about as well is when to walk away from the charts. If I have a loss, I'll close my laptop and walk away. Because for me, I will be looking at this and saying, right, I've had a price action in my point of interest. I've had a break of structure on the lower time frame. I've got a void. I've got my order block. I've got all my entry criteria there. And therefore it made sense for me to enter. If I then get stopped out, that's because something's not working in my favor. Doesn't mean that I've necessarily done anything wrong. It might be that some fundamentals have come out. It might be that just price isn't trending nicely. So the best thing is you don't want to then enter again and lose, and enter again and lose, and enter again and lose. You should never, you should never be in a situation where you are in the charts and you're losing 2-3% each day. So I would recommend, if you have a loss, walk away. I know, like, when you are first starting, it's quite difficult because you need to spend as much time on the charts as possible. But if you're not actively trading on a live account, you can just do paper trades. Paper trades will be absolutely fine. And what I mean by that is just put your risk reward tool on the chart and see how you got on. And then you can monitor that. You can trade that as well. And if you're doing extremely well, that's going to give you that confidence to then take the live trade the next day, should the circumstances occur again, and should you get the same entry criteria. Something else as well that we need to address is that you need to stay in your own lane whilst you're learning. So whilst you're going to be looking on the charts, you owe it to yourself to use your own analysis to help yourself improve. The reason that you've joined the Trading Academy is because you want that extra help with trading. You're either an experienced trader and you want the missing piece of the puzzle, or you are a brand new trader wanting to start for the first time. Now, I realize, because I've been there, I've seen it on Instagram, there's so many people all the time posting, I've got this, look how well I'm doing, or my bias is that GBP USD is going along. If you're in a situation where you're thinking GBP USD is going short, don't copy that person. Because if you copy that person and you lose, you can't then analyze why you've lost. You've lost just because you've copied somebody else. They might not know what they're doing. You've got to have confidence in knowing that you are trying yourself. You know what you're doing. If you then lose, you can go back, you can analyze it, you can journal it and figure out why. Again, are you in too early? Or maybe there wasn't a break structure. Maybe you went in on a tap of a trade when actually you should have waited for more lower time frame confirmations because we're going against the trend. So always stay in your own lane. Do not be influenced by others in relation to their bias. And again, you're going to excel a hell of a lot quicker and learn your own skills a lot quicker than just copying somebody else. And then that brings me on to now in terms of how much time should you be on the charts whilst you're doing the Trading Academy. So when I first started trading, I would literally be on the charts all the time. Morning, evenings, while we're watching programs at nighttime with my girlfriend, I'd be there with my chart at the end of the sofa, just seeing what's going on. And at one point, I thought it became maybe a little bit obsessive, but actually looking back at it now, the more time I spent on the chart, the more I understood price action. So when I'm trading, I recommend you only ever trade a maximum of 3 pairs. I trade EG, GU, and EU. So when I talk about spending time on the chart, I've learned to perfect those 3 pairs and understand how those 3 pairs move. So when you're a new trader and you are trying to understand price action, it will be important for you to look at the chart, see what's going on in London Open, see what's going on in New York Open, see how the daily candle closes, see how the weekly candle closes. And then also go back as well on the weekend and back test and see, you know, again, look at your journal, how price went. So when you first start, you will spend a lot of time on the charts. And that's, you know, you need to do that. I do know some traders, and I've done pretty well doing it as well, just trading one pair. You know, so the reason I have 3 pairs is because I have my favorite, but if there isn't a trade on one pair, I'll look at the other 2. And if there isn't anything on that, I'll just leave it alone. And then won't then start looking at something that I'm unfamiliar with. But I suppose all I'm saying with this is that if you have too many pairs, you're going to spread your time thin across all those pairs in the Forex market. Whereas if you have a designated few, when you spend more and more time on the charts, that more time is going to be more valuable because you're truly understanding price action and how things move. As an example, I know on EG, when we start getting a lot of support on a session low, 4 or 5, you know, 6 taps into this, we're then going to fly to the upside. There's then probably going to be a Wyckoff schematic that plays out with that as well. There's going to be a spring. I'm going to get in on the retest. And that happens time after time after time. Again, like with GU, if we're in this massive uptrend and then all of a sudden we get a breaker structure on the 15-minute, we're likely to come back and retest the session low rather than retest the OB or the void at the top. It's just little things that you'll pick up during your sort of learning phase. And then when you get to a level where you understand your pairs a lot more, like I do now, you'll spend minimal time on the charts. So I'll look in the morning, might look at New York Open, and then I'll see how the daily closure looks like. And then also as well, when I'm looking in the morning London Open, you know, 8 o'clock, I'll also, if there's nothing there, then I'll set an alert, or I'll set a buy order or a sell order. And it will, obviously it's less time that I need to spend on the charts, because I know for me, the more time I'm on the charts, the more time you're likely to see a trade that isn't there. So with the strategies I've told you, as long as you follow these, you will be successful. As long as you put the work in, and you have that good motivation and work ethic, you'll be absolutely fine. I'm not saying it's going to happen overnight. It depends, first of all, how you can control your negative psychology. Are you going to revenge trade? Or are you going to be consistent and disciplined and say, well, if I lose a trade, I'm shutting my laptop. I'm not again then going to jump in another trade somewhere else. Or are you an experienced trader and you've kind of got the missing piece of the puzzle and now you understand it all? So as an example, I was talking about journaling. When I go back and look at my previous journals like 4 or 5 years ago, I like to laugh at it now. Like losses that on there, I'd have a fib on and I'd be looking to enter, and then price would come up and spike me out and go in its direction. And then now knowing what I know, basically all price has done has gone to where my entry would be now today, in terms of it's gone to fill an order block and avoid based on a breaker structure, absolutely hit it to the T. But looking back and understanding that, at the time I didn't have a clue, but whereas now I'm giving you the information so so you don't make the same mistakes that I did. And so by having this information, and when I figured all this out as well, and forward tested it and back tested it, that then allowed me to massively excel straight away. So all the losses that I had before in Forex, you get all those back. Right? It doesn't take long to get them back. So you just need to be disciplined, put in the work. I realize a lot of you will have jobs. I realize a lot of you will be working 9 to 5, working nights or whatever it may be. But as long as you're, let's say, watching a few videos a day or putting in some work on the weekend, you're already one step further than you was before you started this program. So just keep at it. Everyone progresses in their own time. But I truly believe that the information that you can see here can make you consistent. Like I said, I use it every day and I'm now a consistent trader. And then the last thing that I kind of want to talk about as well is capital. So trading capital. A lot of people come to me and say, well, I've only got 100 quid. How am I going to make a load of money if I'm risking 1% to get 3%? If I'm risking £1 to get £3, right? Yeah, it's difficult. But there are a number of options out there once you are consistent to then get some more capital to make those larger gains. So there are firms out there called prop firms, and I'm not going to name a load of them. The only kind of main legit one that I know and has been around the longest is FTMO. And basically it's ftmo.com. I'm not affiliated with them. not advertising them. I'm just giving you the information. Don't want you to get scammed by anyone else. There is, I'm not going to mention them. But the way that a prop firm works is you prove to them that you can trade and you can be consistent, and they will give you money to trade. And then they will give you up to 70 to 80 to 90% of the profit that you make every month. So as an example, FTMO, you can go from 10,000 all the way up to 400,000, right? So let's just say you do a 100,000 account. The more money you apply for, the more you have to pay a fee up front. And then what you have to do is make 10% over 30 days without violating their rules. So one of the rules is you can't go down more than 5% drawdown in a day, and you can't go down 10% overall of the entire balance. Now, what I said at the beginning of this is you shouldn't be going down 5% a day. You shouldn't be going down 3%, 2% a day. One trade to start off with, and then see how that plays out. And then once you've then passed the challenge and you've made 10%, which should be easy to you based on the tutorial videos that I provided, and as long as you put in the work, you can do that, right? I've seen so many people do it. I've had previous students that have £200,000 accounts, £400,000 accounts, making their monthly salary within a week, within a few days. Like imagine a 200 grand account and you get a 1 to 3 trade, you've then made 6,000. So these things like extremely realistic, and this needs to be on your radar. So when you're trading with a £100 account, you need to be so disciplined, and you've got to look at this and saying, right, I need to be disciplined now, because if I'm not, I will not be disciplined when I've got a 400 grand account. And you might say to yourself, you will, because it's a lot of money. Believe me, you will not. And I've seen it time and time and time again. People get to that 400 grand account and then just blow it because then they're being greedy and trying to flip it. Like, no joke. So going back to the challenge, so you get 10% over 30 days. If you don't pass it, if you don't get 10% in 30 days, but you haven't violated it and you're above your initial balance, you get another free go. So once you've got your 10% within 30 days, they will then send you logins to do a verification. Verification is that you just need to prove yourself once more, and you need to get 5% over 60 days. Doesn't matter if you get 5% in 10 days, you then pass it and you get the account. But once you've got that extra 5% of the verification, they will then give you your logins to have your account. Now, it's not a real money account that you get. It's a demo account, but that's just to protect them. And they basically copy trade what you've traded on your demo account, and they trade it to their live account, their live funds. And so anything that you make and comes on your N24 is legit. And then once you've got that, then at the end of the month, you can then put in your invoice and say, right, I've made 10,000 this month. They'll give you an 80-20 split. I believe it's 90% on the scale up plan. Just have a look on ftmo.com. And that's a way for you to get your trading capital. You don't have to go for 100 grand. You could start off with 10,000, then go to 20, then go to 50, then go to 100, then go to 200, then 400. Do it step by step if that's going to help psychology, which actually I recommend, to be honest. But once you've passed that challenge and verification and you have your first withdrawal, they give you the money back as well that you paid initially to do the challenge. Another way of trading is I wouldn't recommend having all your life savings in your own trading capital account and just trading that, because if you start losing, you're going to get that negative psychology, because these are your life savings and they're now dwindling and you're losing, and you're going to trade to try and get them back because you don't know how you're going to tell your wife or your family you've lost your life savings, blah, blah, blah. So I just think using a prop firm is a good way, because it's not actually your money. You've proven yourself, so you should be consistent. But let's say if you do blow the account and you lose more than 10%, and they take the account away from you, you don't owe them anything. And that's it. So there's less responsibility. And I think that helps with psychology. Another way to get funds is through private investment. Who am I going to speak to? Believe me, when you start being consistent, they will come to you, right? When you start being consistent, you'll get more sort of in the trader realm, and people will throw money at you. And what I mean by that is, let's say you have someone multimillionaire and they're investing $1 million a year in the S&P 500, right? The S&P 500 gives a safe return between 5 and 8% a year. Let's say you're making just 5% a month. That's 60% a year. So that investor give you £1 million for you to make 60% a year. It's just going to throw money at you. You're making way more than they can make in the S&P 500. However, what comes with that, though, you're going to have to give them a year's worth of results. So you can sign up with like, to track your results, FX book or something like that, and then provide that to them. What they will normally do is then give you a small amount of their money for you to trade first. Once you prove yourself on that, it's literally an open checkbook. You'll get more and more investors. And the difficulty with that and the psychology side is you need to figure out the contracts for it. You need to figure out what happens if you lose. What's your percentage? You're not going to be getting 20% on a £1 million investor. You might be looking to get 50%, if that. But that's another way for you to get trading capital. So I don't recommend putting all your money into a trading account. And what you can do is I use these prop firms as a stepping stone. So get some money, withdraw it, put some into a house, put some into crypto, into other investments, whatever you want to do. It's not financial advice. And then maybe put half of it into your own trading fund. And then over time, you build and build and build and build and build that up. And you're just using the prop firm as a stepping stone. And eventually you will have enough capital, enough investments where you're not wholly reliant on what's in your trading fund, because you've got other profits elsewhere, other investments. And then you can trade your fund that you've built up with your profit from your prop firm without any restrictions. So I hope that all works. And just like a final piece of what I would say going away from this is, please, please, please be disciplined. If you're not, you won't win. And I know I wasn't disciplined at first, and it was only really once I truly started putting that discipline into place, I got more and more and more successful. Be robotic in your approach. It doesn't matter if you win or you lose. It's the same emotion. It is one trade out of our number. Let's see how it gets on. Make sure you've always got your confirmations there. One thing I recommend is filling in the trading plan. Have that printed out with you. And when you come to look at a trade, you can then tick off your confirmations. You can look at your confirmations on the plan. You can see if everything is there ready for you to take the trade. Like with me, I'll now just look at the chart and say, high time frame point of interest. I've got a break structure now on the 15-minute. I've got an OB maybe on the 5-minute. I've got the void. I know where my stop loss is going to be. Doing all that straight away while looking at the charts. Whereas I don't expect you to be able to do that immediately. You're going to have to look at it and go, right, so what's going on? Tick them all off as you go along. So have your trading plan printed out. All the material you need. Like, again, if you're brand new to trading and you don't know what a candlestick is, have the PDFs printed out and have them around your computer. Candlestick formations, this is all going to help you and excel your trading. Don't think it's a get rich quick. It's not. You've got to think, and I mentioned this on a recent podcast. If you want to be a trader, it's going to take you time. So if you want to be a doctor, a lawyer, a psychologist, it's going to take 5 to 7 years for you to qualify. And then you've got to go out in the real world and make money. Whereas as a trader, it's the same thing. It's going to take you time. I'm not saying it's going to take you 5 to 7 years. If you put in the work with the right information, which I've now given you, it all depends how much work you're willing to put in. And if you're working on this double the time that someone else is, you'll get there quicker. But then that doesn't mean that the person that can't dedicate all that time, won't get there. It might just take them a few months longer. So really, really study all of this. Treat it as something which is really serious. It's not a get rich quick scheme, but I can guarantee you, once you understand this and you know how to trade, that's when you can get the benefit, and that's when your life can change. So I hope that really helps. Obviously, if anyone listening to this is on the mentorship and you have any questions with me about psychology, let me know and we'll go through it in our one-to-one calls together, and I can help work you through any negative psychology issues that you might be having to help you get out to the other side of success. So enjoy the rest of the program, and I'll catch up with you soon.